Hello, and welcome to Smart Mortgage Insights. I'm Mandy LaRose.
And I'm Conor Levinka. Today we're going to talk to you about who all is involved in the mortgage transaction. We're the face of it, and we always want you to contact us directly for any problems, but there's a lot of parts and pieces and nitty-gritty to the mortgage experience and who really touches your loan. So today we're going to dissect that a little bit.
Yes, there's a lot of people at the party, believe it or not.
There are.
I know it doesn't always feel like that, but there are a lot of people at the party when you're getting a home loan. Of course, we're going to discuss today what kind of happens in our office. There's a lot more people that are outside of it, and we'll touch on that a little bit too. So to get started, like Conor said, we are the loan officer. We're the face of it. So when you're dealing with the mortgage company, you're dealing with money. That's where you're going to go to start this process, to find out exactly how much of a home you can buy and what you can afford. But there are a lot of people behind us that help make these decisions as well. So we want to dissect and get into that a little bit. So to just kind of start, let's get into it as to who is going to be helping you along with this. We all have processors generally that help process our files, and they are the ones kind of in the background keeping us in check, so to speak. So they're making sure that all the checks and balances are there as we get your file ready for all the touches that are going to happen from there.
Definitely. They organize everything. They're going to get verifications on your behalf through your employer, maybe other employers, maybe even a former landlord, things like that. And they really organize all the information that we have taken in and kind of put it in a more palatable place for the next person. And the next person is the underwriter. The underwriter is simply going to verify that we have done our job properly. Every program that we put you into is going to have a set of underwriting guidelines, and it's going to say what is allowed to be used if it's a paycheck or a bank statement or different debt to income, loan to value, all the different things. And they simply check to make sure that we're abiding by the guide.
Absolutely. I mean, they really are a double check at the end of the day. The underwriter, the undertaker. The underwriter is there to make sure that at the end of the day that you're going to be able to pay this loan back and that it fits the parameters of what it is that we're doing. And the reason there's many reasons it's important. One, we need to make sure we get our money back. But two, there are other people that are going to be looking at this loan down the road as well. It's not just going to be us. It's not just going to be our underwriters. Most mortgage companies and brokers, things like that, a lot of us do not hang on to our loans. Mm-hmm. So later on down the road, after your loan's closed, you've moved into your home and your life is moving on. Your file is actually still kind of moving along as well to the next person to be looked at also. So it's really important that we make sure that we've got all of our ducks in a row and that all of the players, and so far it's been us, the loan originator, we've got our processor who's making sure all the documents are put together correctly. And now we've got the underwriter looking at the file, making sure that we're basically coming up with the program, that we're fulfilling the program requirements of the loan that we're trying to do and desire as well.
So like Mandy said, what she was alluding to is other people are going to look at this down the road. And so maybe, we understand your circumstances and your documentation and things like that. But someone else, months, possibly years down the road, they need to be able to understand it too. And so that's why we sometimes ask for a letter of explanation or some clarifying documents, more bank statements or anything like that. So the whole story can be told down the road to a different person.
Absolutely. And I think sometimes that's kind of the biggest misconception with underwriting is, the file comes out of underwriting and we contact the borrower over it, for something that we need. And the borrower says, oh, well, it's just this or just whatever the situation is. Well, it doesn't always work that easily that it's just this or that because, again, we're not going with the file. So every time someone touches the file, we can't tell your story. The file has to be able to tell the story on its own. Exactly. So we might need a little more documentation to then explain exactly what, it's just this is. So that's why we maybe dive a little bit farther into things sometimes because of that situation. The story needs to go along with the file continuing down to the very last person that looks at it.
The next person involved is the closer. And so the closer is really going to summarize everything that we have done throughout the entire transaction on the previous 30 to 45 days typically. And they are going to make sure everyone gets paid properly. So make sure all the fees are lined out correctly, make sure that the contract is correct, where everybody's going to pay whatever fees. And at that point, the closer will generate a closing disclosure, and then that's going to go on to the title company. So the closer just kind of puts a bow on it, if you will.
Basically, yes. I mean, when you are looking at a closing document, or even in the beginning of this process, you're looking at a cost sheet, a loan estimate, one of those types of things. You see a lot of fees and you think, wow, I'm being charged a lot to do this. Know that a lot of those fees are not us, the lender's fees. Again, as we just talked about, there are a lot of people involved in this transaction. And so we have vendors out there like appraisers, the title company, the title policy that needs to be done, the recording fees that are done, tax registration, credit reports. There are a lot of other things that go into this that aren't necessarily just our fee as to what we get paid to do the loan. We have a lot of third parties that are dealing with the mortgage as well. So again, our closer is going to put that closing document together so that all of the fees that are being collected are spelled out. Of course, this won't be a shock to you, the borrower. You will have known all of this information throughout the entire transaction, because that is our job, to make sure that you know what is going on and how much money you're going to be bringing to closing from start to finish.
But it doesn't end there with the closer.
It doesn't end there.
The file still moves on. And so from there, it'll go to possibly a post-closing auditor on our side to make sure, yet again, to double, triple, quadruple check that we have that proper pay stub, that we have the proper bank statement, all the documents are signed properly. And once that's taken care of, we will then ship it to your final investor. And it sounds like shipping is more like, UPS and FedEx, like what we would normally think of shipping. But in this case, it's actually shipping the loan itself to its final investor. And that investor, too, might want to do their own auditing. And so they may look at it and say, okay, I know that you put this story together, but we're still kind of missing a piece. Can you help us with this one little piece?
Absolutely. And clarifications happen. We can tell the best story that we have told, and
makes sense to us.
It makes complete sense to us, makes sense to the company. It's spelled out all the way down the line. Everyone just thinks, okay, this is a great story. This works. And then it gets to the investor, and the investor says, I don't know about your story. Now, those are kind of one-offs. That doesn't generally happen too often. But again, that's why it's so important that we have all the players in place and all the pieces to the puzzle, because this is as you know, when you're buying a home, it's the biggest investment you're gonna ever do. So just imagine you're one person buying a home, and imagine how many loans that we are doing for individuals out there. It's super important that we make sure that we're doing that everything's done correctly, and that's why we have all the checks and balances in place to make sure that happens.
But wait, that's not all.
There's more.
It could be that your loan gets traded or sold to a different investor down the road, which is becoming all the more commonplace. And so now, you're happily paying your payments for, 1 year, 2 years, 3 years, whatever it may be. And that servicer may sell it to someone else. So now yet another party might look at your loan 2, 3, 4 years down the road, and they need to understand that story too. So anyway, there's a lot to it.
Absolutely. There absolutely is. One thing to know, and this is a question that comes up a lot, when your loan is transferred to your servicer, nothing changes on your loan. Your
Not
interest
allowed.
rate, your payment, all of that is set in stone. When you sign on the dotted line at closing, that part is done. So unless you chose an adjustable rate mortgage or something like that, nothing is going to be changing. Even if your loan gets sold many times over, which, like Conor said, unfortunately, it is becoming a much bigger practice. But as far as your loan terms go, none of that is going to change.
Well, we hope we shed a little bit of light on to the amount of people or touches that
and that's
your
just
loan
here,
gets.
and that's just in the mortgage
Yeah.
company. I mean, my gosh, we could explore a lot more people that touch it as well. Yeah.
But yeah, that's just within our company. So we try to be the face of your loan, and try to never get the other side involved to where you have to hear about that. That's kind of our job.
Absolutely.
Anyway, thanks for tuning in, and we'll see you next time.
This podcast is sponsored by Residential Mortgage, LLC, NMLS numbers 167729, 196, 576, and 1820404. Equal housing lender.